Brad Williams, Frugal Finance. How about break-even analysis? Imagine you're starting a business. You want to take on a huge responsibility and want to know how many products you need to sell to cover your costs. Let's say you're thinking of making a new product. Figure out how many of these products you need to sell to break even. That means to cover all your costs. You need to know a few things. How about the sales price per unit? How much you sell each product for? Let's say it's $12.50. Equipment costs, how much it costs to get the equipment you need to make the product. Let's say it's 200 grand. Overhead costs per year. Other costs like rent, utilities, etc. Let's say it's 50 grand a year. Operating and maintenance per hour. How much does it cost to run and maintain the equipment for each hour it's working? Let's say it's 25 bucks. Production time divided by units, hours. How long it takes to make 1,000 units of the product. Let's say it's 100 hours. Machine life, how long the equipment will last. Let's say it's 5 years. Required return, the profit you want to make. Let's say it's 15%. And salvage value. The value of the equipment when it's worn out. Let's say it's 0. With all this information, you can calculate how many units you need to sell to cover all your costs. In this example, it's about 10,966 units. Now, let's say you're also thinking about whether to rent or buy some equipment, like an air compressor. If you expect to need the equipment for more than 100 hours per year over the next 5 years, it might be better to buy it instead of renting. The decision depends on factors like the rental cost, purchase cost, maintenance, and how much you'll use it. Finally, let's say you're considering buying or leasing a copy machine. You need to compare the cost of paying for it up front versus financing it. This involves looking at things like interest rates, tax implications to figure out which option is better. Should you rent or buy? Depends on how much you'll use it and the cost involved. Suppose a firm is considering manufacturing a new product and the following data is provided. Here we go. Here's our new product, $12.50. Equipment cost 200 grand, overhead 50, operating per hour cost, production time, machine life, salvage value. So what we have to do, and again, you can't do this with Excel, but what we're doing is we're using the payment and we're taking the rate, number of periods, remember our 200 grand plus 50 grand, which is our overhead per hour. Then we're going to take this 100 production time divided by 1,000 times 25. That's just going to give us our cost to produce plus 12.5. It's going to give us this 13,966. 137,079 is C43, which is our break even. So we're going to take 10,966 times C35, and that's our sales per unit. Our break even is going to be 137,079. Consider a contractor who experiences a seasonal pattern of activity for air compressors. The company owns 8 air compressors and feels that this number will not be adequate to meet future demand. The contractor realizes that there will be times when more than 8 air compressors will be needed, and is considering purchasing an additional compressor for use during peak times. A local equipment rental firm will rent air compressors at a cost of $50 a day. Air compressors can be purchased for $6,000. The difference in maintenance and operating costs between owned and rented air compressors is estimated to be $3,000 a year. Let X denote the number of days a year that more than 8 air compressors are required. The following break-even analysis is performed. A planning horizon of 5 years, 0 salvage value, and 20% minimum attractive rate of return are assumed. So here's our 20%. Compressor life, 5 years. Return, 33.4%. Daily rental, 6,000, etc. Here's our break even. Payment. You're used to using this payment function. We're going to compute this number of hours. We have payment C58, which is this 20%. C59, years. C62, 6 grand is the cost, minus 3 grand maintenance. Divide this by daily rental, 100 hours. Based on past history, if you plan to rent a compressor for more than 100 hours per year over the next 5 years, it makes sense to purchase a compressor versus renting. Brad Williams, Frugal Finance. Thanks for watching.